But first, this week, the International Monetary Fund and the World Bank are holding their spring meetings here in Washington, D.C. It is their chance, well, to show the world on the progress and the challenges facing the global economy. In a report just released, the IMF trimmed its outlook for global growth. Live from the IMF headquarters, Tracy Tandon is there with more. Trace?
That's right, Phil. The World Economic Outlook report just came out a few moments ago, and in that, the IMF says that global growth has been trimmed this year to 3.6%. That's actually a slight revision from the original estimate of 3.7%, but overall, it's an increase from the 3% growth that the global economy had last year. And the big driver or the big push behind that increase in global growth is actually the United States. We've seen a number of positive traits of that report come out for the U.S. economy. Some of the big things, such as a recovery in the housing market, a recovery in the banking sector in the United States, cuts to government spending, as well as an overall increase in household wealth. So the United States has been quite a major impulse behind the driver of global growth. Now let's cross over to Europe for a moment. The Eurozone, it's quite a fragile state still, according to the IMF. However, the IMF does say that there are few countries within Europe that are doing increasingly well over the past year. Countries such as Germany, for example, which has seen an increase in consumer spending as well as business spending. However, the region still remains quite fragile because there's still high levels of government debt in countries such as Italy and Spain. And according to this IMF report, they say that the biggest threat to any sort of destabilization within the Eurozone will be deflation. Now, let me talk about emerging economies now. Emerging economies is always a hot topic. You and I follow it very closely. The IMF says that BRIC nations such as Brazil, Russia, India, China, they are all expanding and are forecast to grow by 4.9% this year. However, it's interesting to note that the IMF says that these countries in the past were really attractive investment opportunities or investment vehicles. However, you know, it's that T word again, taper. Ever since the Federal Reserve began scaling back its bond buying, its $85 billion a month bond buying program, what the IMF notes is that we've started to see a lot of flight of foreign capital from these emerging economies. This in turn has then seen the currencies being driven down, and the central banks of these emerging economies have had to respond by increasing interest rates. So overall, good news for emerging economies. However, investors are still going to be experiencing a lot of jitters until they shake off all the sort of taper terror that's been going on.